Hello and welcome to VIVA Financial Tuition's industry analysis for the management case study of May 2017. My name is Hugo Newman and I'd like to thank you for choosing to study with us here at VIVA Financial Tuition. Before I get into the meat of the industry analysis itself, let me just give you a quick overview of the contents of this analysis. So in the first section, I'm going to give you a very quick personal introduction and also a quick background on the company that we're dealing with in the pre-scene. Then in section 2, I'll move into what I call the macro view. I'll be looking at global growth trends in this industry. I'll also be looking at some of the potential drivers of that growth and also looking at some possible developments in the industry over the coming years. I'll move then into the industry breakdown based on what we're presented with in the pre-scene itself. And I'll look at some real-world examples of the different sections within the industry in terms of shop types, vendor types within that industry. From there then I'll move into some real world case studies, and this is the real meat of the industry analysis, and we're going to be looking in particular at two cases or two types of company in the real world. One is Poundland, which is a very close analogue in many ways of the company that we're dealing with in the pre-scene. And then in the second section of the real world case studies, I'll be looking at Lidl and Aldi together, because in many ways they're very similar, their structure, their strategy and so on, and looking at their success in recent years and the implications of that success for a company like Poundland or indeed BES, which brings me then into section 5, in which I'll look at some of the threats and opportunities for BES based on these real world cases, drawing out some of the most important lessons of what came before and how that might affect strategy for a company like BES going forward, which might then help you to anticipate some of the questions and kinds of questions that will come up in the case study in May 2017. And I'll conclude then in section 6. So before I begin, as I said, I'm going to give you a quick personal introduction. I'm Hugo Newman, as I said at the beginning. I hold a PhD from University College Dublin in Ireland. My research focused primarily on the interaction between political regulation, economic development, and institutional ethics. So I think I'm quite well placed to guide you through this component of the preparation for the May 2017 case study by looking at the industry as a whole and the various regulatory and economic factors which might bear on institutional decision making within that context. So let's have a quick look at the company that we're dealing with in this pre-scene. It's called BES and it's a value or discount retailer based in a country called Country E. We're not given much more detail than that of this kind of country, what it is, what kind of country it is in terms of economic development and so on. No other clues are given as to what kind of country it might be based on in the real world, so I'm not going to say much more about that. It was founded, this company, in 1995, and it was listed via an initial public offering in 2012. It has 240 stores in Country E by the end of 2016. And 5 what they call trial stores in neighbouring Country X. Again, we're not told very much about Country X, whether or not it's similar or different from Country E. And it sells all its products at a single price point, or SPP for short, of $1, which is the currency of Country E. Okay, so let's get started on the macro view, looking at this sector's growth and the outlook for coming years. So I have here an analysis from the website Statista, which is a very useful resource for looking at industry trends and growth trends in different industries from a global perspective, and also gives you some more fine-grained information about particular countries and regions. So here we have a breakdown of retail sales worldwide from 2008 to 2018. The 2018 component obviously is a projection from Statista itself. And we also have figures for 2013. And it's broken it down into these nice handy segments here. You can see we have hypermarkets and superstores, supermarkets and neighborhood stores, discount stores, convenience and forecourt stores, e-commerce, cash and carries and wholesale clubs, drugstores, pharmacies and perfumeries. So discount stores obviously is what we're interested in. And we're going to look at the percentage changes here from 2008 to the projection figures, which are 2018 here in the final row here, which is covered up. So you can see here 75% growth over 2008 is what's projected for 2018 for the discount store segment of the retail sector. So let's compare this to the other areas we have for hypermarkets and superstores. 37% growth over 2008, 48% growth over 2008 for supermarkets and neighborhood stores, 78% growth over 2008 for convenience and forecourt stores. Then e-commerce is the big change, a big mover in terms of growth for this period, 353% growth over 2008 based on projections for 2018. 60% then for cash and carries and wholesale clubs, and 48% for drugstores, pharmacies and perfumery. So you can see here the main movers are discount stores, convenience and forecourt stores, and e-commerce, obviously. Now, it's important to bear in mind that the online growth here is by and large irrelevant to the discount sector based on both real-world analysis and what's said in the pre-scene. So you can see here there are three sectors that have largely been untouched by e-commerce, and that's cars, gasoline stations and groceries based on PricewaterhouseCoopers 2015 analysis of global retail trends. So groceries here covers what many of the products that are sold by typical discount vendors. So for example, tinned foods, domestic cleaning products, detergents and so on, batteries and various DIY equipment. All of these would roughly fall under the grocery segment, and so e-commerce is only making a very marginal impact on this grocery segment of the retail market. So as you can see here, discounters, this is based on the Institute of Grocery Distribution's analysis, discounters have approximately 17.9% market share of the overall retail sector in the UK, and online still only has around 10% of that market. So in many ways, discounters are still more significant than the online, even though the online segment of this particular sector has grown substantially in recent years. It's not really having too big an impact on traditional grocery retailers and discount retailers in general. And discounters are still quite well placed, relatively speaking. And as is mentioned in the pre-scene, the BES company is not particularly interested in the e-commerce area, online area, in terms of growth avenues. And we'll see why as we go through this analysis that might be the case, why it might be a bit irrational for a company like BES to go the online route as a way of increasing their sales. So in recent years, we've seen discount retailers in general really putting pressure on the kind of mainstream big chains, and particularly when it comes to the kind of grocery segment of the market. So you can see here, it's grown 48% over the last 5 years in the UK, the discount retail sector. And we've seen a much slower 34% expansion of what are called the big four supermarket chains, the likes of Tesco, Morrison's, Asda and Sainsbury's over that same period. So the discount segment is really, relatively speaking, in a very good and healthy position in recent years. It's been growing quite substantially, and it looks to be putting a lot of pressure on the kind of mainstream big chain supermarkets like Morrison's, Tesco, Asda and Sainsbury in the UK. So we're going to be focusing a lot on the UK as a point of comparison, because it has a company that is very, very similar in many respects to BES, as we'll see, and that's Poundland. And so it's for that reason that I'm focusing in many cases on the UK situation as a point of comparison to country E in the pre-scene. So let's look now at some of the possible growth drivers of this growing industry, this segment of the retail industry in the discount sector. What might be causing this substantial relative growth compared to the kind of big four mainstream supermarket chains? Well, according to some analysts, the recession in 2008, as we'll see further on, has been a significant factor in establishing new consumer habits. So the idea here is that because of the sudden financial crisis around the year 2008, many traditionally middle-class shoppers started to move into the discount sector to try and find bargains, as they found they had less disposable income. And since that time, they have developed these kinds of habits, these bargain hunting habits, in looking for cheaper products, cheaper domestic products in other areas outside of the mainstream big chains like Asda and Sainsbury's and Tesco's. It's become habitual, and in many ways as well, it has become destigmatized according to this analysis. So discount shopping now is considered more acceptable for typically middle class shoppers. And so it's becoming less frowned upon in many ways. And perhaps this explains why we're seeing this growth in this particular sector. So you can see here, The Guardian has analysed this sector, this discount sector, and has come to more or less the same conclusion. So for example here, they say that the runaway success of chains such as Primark has helped remove the stigma associated with value retailing. And in many ways, Primark is a kind of a model for these discount sellers, because it has managed over the years to move from something that was considered cheap and cheerful and a little bit low quality to something that is now well respected within the clothes industry as somewhere you can find relatively high quality products and fashionable products at a very low price. And so it has had huge success throughout Europe, and it's moving into the rest of the world now as we speak. So this is from the BBC. We also see careful habits initially born of necessity have now become entrenched according to this analysis. And they've successfully converted the middle class, with a quarter of its customers now from the so-called AB demographic, which is the wealthier end of the population. This is, again, relating to discounters, discount stores in general, not just in the clothing sector, but also in the general grocery and domestic product sector. Now, this raises an interesting question of whether or not discount sellers and discount vendors are in some ways immune to economic booms and busts and the ups and downs of economies. According to the CEO of Poundland, which we'll be looking at in a moment, this is the case that in many ways these discount retailers are immune, because in bad times, of course, people are going to feel the squeeze and they're going to want to find bargains as much as possible. But because of the habits that they develop in those periods, they then are more likely to continue even as the economy improves. They develop kind of customer habits, shopping habits, and so they're likely to have some loyalty to these discount stores and may continue regardless of the fact that the economy improves. This is questionable, and I'm going to come back to this idea that discount retailers are in some way immune to economic cycles. I think it's disputable, and it may be that this Mr. McCarthy, the CEO of Poundland, is just engaged in some wishful thinking. So I'm not going to give this too much credence, although it is something to consider. So now let's have a look at the industry breakdown. So in the pre-scene, we're given this table which goes through the different kinds of discount retailers that you can find in the real world. And I'm going to just give you a few examples to illustrate these different kinds of discount retailers. So we're going to start first with the SPP, or single price point retailers. And there are many real world examples of this, but some of the most important in the real world are Poundland, which is based in the UK, Deals, which is actually a subsidiary of Poundland but is based in Spain and Ireland, and then Eurogiant is another example of a discount retailer which is based in Ireland. So you have lots of these different SPP retailers around the place. In England in particular, in the UK, they're very popular, and there's lots of smaller equivalents to Poundland. And you have companies like Pound World, which is one of its main rivals, also dealing in the SPP sector. So we're going to look at Poundland in the next section, in particular focus in on their recent developments, strategies and so on, and compare and contrast it with BES. Then we have the limited assortment discounters. So as you can see here, this says that LADs are essentially traditional retailers such as supermarkets who offer a limited range of goods at a single price point of say $1 in order to win business away from SPP retailers. So in this case, I give examples like Tesco, Eurospar and Sainsbury's. These would be the kind of big chains which often offer discount aisles, and they have SPP aisles for different products. Aldi and Lidl might be included in this category. It's kind of hard to categorize Aldi and Lidl in many ways. They are breaking new ground, and they're kind of a revolutionary company in many respects. They kind of buck the trend, so they fall somewhere in between this category and the next category, which is the value general merchandising, or VGM. So these are retailers that operate in the value retail market but are not constrained by a single price point. So typically they operate from much larger stores than BES and stock a wider selection of merchandise. So as you can probably guess, we have companies like Walmart, Kmart, maybe even Tiger, which is more popular in Europe. And again, it's questionable whether or not you could fit also Aldi and Lidl into this segment, because as we'll see, Aldi and Lidl have really branched out into broader categories of products than simply groceries.